Hello everyone, welcome to EliteWithJazzFocus.com YouTube channel. My name is Henry. Today is Thursday, February 27. The time is around 5 a.m. GMT. So today we will be updating the chart of the ES. Now the indices has been selling off very aggressively, right? Starting last week, and of course the sort of the news right now is because of the coronavirus, potentially a pandemic, disruption of the supply chain, and on and on. I mean, the virus news has been going on actually starting from last year, and the Chinese already had it from last year. It's been quite serious since last year, but only until then we got the sell-off, and then basically the narrative now revolves around this virus. But anyway, sometimes the narrative is being made only after the sell-off, right? Because if the narrative is the same, it should have been made a long time ago, since last year. But since we only see a sell-off now, so now the narrative starts to develop. This ES here, we have this decline here, right? And this is our wave 3 right here, okay? And then we are now, then that means we are now in the wave 4. Now the structure of the wave 4 is calling it as a WXY. I know it looks impulsive, and it could be a 5 ways, but for now we are calling it as a WXY with a very aggressive connector here in the middle, right? With a very aggressive, because it's very shallow. And if this is a connector from the peak, then that means our 100% extension of the WXY has been hit here at the 100%. Now it still can continue to extend lower even though we have hit the minimum, right? Because it's a kind of like a wide range here. And if we look at it from here, from this 3261, we got what looks like a 5 ways down, we got a correction, then now we are looking for another 5 ways down. Now sometimes the C leg can truncate. However, let's assume that the C is going to be reaching equal to the A, so that gives us another target, which is the internal 100% ABC, towards 3014 and 2961. So I think we could expect somewhere around, let's say, give and take, 2690 and 3000 as a possible target for this move down. Okay, and then from there we have a chance for ES to start doing some sort of consolidation, and maybe spend a few days at the lows, up down, and then finally it can start to bounce. At least it's going to be correcting this entire decline, right? It's going to be correcting this entire decline, maybe in 3 pounds of some sort. Now, so that's what we are looking at, right? And because this is 3, that means this is going to be ending the 4, and then potentially still can make one more push higher in the wave 5. Now let's take a look at the larger time frame, and I want to look more today into the larger picture. Of course, not a full count, but it's kind of general idea about where we are. Again, if you do like to see the full count or other indices, you can always check our 14 days trial. The link is provided in the description video. Here, if we look at the daily chart now, I'm putting the 3 and 4 here, right? Which is the 3 here, and then the 4 is still in progress right now. And we got this trend line coming up from June, okay, and it gives you a target towards around 3000, as you can see, same as the estimate we got last time, around 3000, give and take, right? It can go all the way to 2960, and I think 3000 to 2960 is probably sort of the area we can be aiming for in this decline here. Now suppose this is 3 and this is 4. If you take a look at the December 2018, right, again, just to recap, this sell-off happened very quickly from September to December 2018, and this is when the Fed tried to normalize the balance sheet, right, and didn't work out. The market crashed, and since then they sort of did a U-turn they print money again, but they don't admit it's QE, right? And then it rallies here. Okay, so it makes new high. So the rally here, so then what we are focusing on right now is the rally from December 2018. If this is 1, 2, 3, 4, so this is going to be in the last push. If it happens and it makes new high, then that's going to be in the last push before we got even bigger pullback than this one, right? If you think this one is a big one, then if we indeed make a new high one more time, then the next sell-off after that is even bigger than what we had. All right. So all right, so now if we take a look at this structure of the rally from December 2018, it does give us another possible leg to the upside, right? Because it, I mean, unless of course you can put the 3 and 4 somewhere here, and then you adjust the internal count and make it fit so that this is 1, 2, 3, 4, 5. Now of course alternate is always there, right? Alternate is always there, that we are ending the 5 ways up, and then we have then ended the cycle from December 2018, and even the cycle from all-time, not from all-time low, but from the 2009, right? This can also end. Okay, so sort of the larger time frame or larger picture, if I zoom out everything, okay, you can see ES here clearly is an impulse, right? There is no question that this is an impulse. This entire rally, let's assume we start from 0, the indices is always going to be bullish because it reflects the human progress. Revenue will always grow from the company. If the revenue starts to shrink every single year, then we're going to be in, you know, in problem as a human race, right? So it will it always will have a upside trajectory, and every now and then, you know, sometimes we get recession here and there. That will be a pullback, right? But then overall, when we are done, then we recover again and so on. So you can see right here, this entire rally here, this is the dot-com bubble here, and this is the Lehman Brothers crash, the financial crisis, and this is the money printing era, right, from the central banks around the world. Now if we look at it from the very large time frame perspective, we've been mentioning this a couple of times in our articles as well as in the free webinar, but sometimes we got a lot of new visitors, new members, and new you know, followers. So sometimes from time to time we're going to be checking this out again. So if we look at it from this perspective, let's assume we are from the all-time low. We got this marginal high here in the year 2007. We can count this as a flat, right? Because this one looks like impulsive. Everybody is so fearful in that crash here. So this is an ABC as an expanded flat. Now after that, you can see a very extended move to the upside. Okay, and take a look at the Fibonacci here. If you measure the Fibonacci, this is hitting the 1.618 extension, right? This is a Fibonacci extension, and so now the question is, where are we now in terms of the super cycle degree, right? Because in the Elliott wave principle, wave 3 normally is the strongest, the longest wave, and normally is 161.8% extension. So this is it suits the principle to mention that this is, if we are going to end, then we're going to be ending this 2009 cycle at some point, right? So you can say, okay, this is already finished. Let's say 1, 2, 3, 4, 5, and then we end this one. Then we're gonna get a major not like the top that people are usually talking about, like a very real top, but it is a wave 4 in the grand super cycle degree, right? Because you got a 1, you got a 2, and this is only your wave 3. But it doesn't mean it is going to be a shallow pullback. It doesn't mean it's going to be a quick pullback. You notice here, because we're talking about grand super cycle, you notice this one, the grand super cycle with 1 to grand super cycle with 2, that took about 9 years. This is 2000, right? This is the year 2000. This is the year 2000. That took about 9 years. So if we are indeed going to do a wave 4 at some point, right? And we are getting there. We are getting there because you can see right here, and this could be your final with 5 right now, to end the entire 5 ways up from 2009. And then we are just talking about possibility of one more push higher within the sub wave before we finally end this cycle. And therefore, if we end this cycle, we can also potentially end this entire cycle from 2009. All right, so we're talking only just maybe one swing higher. If we are indeed still gonna make a new high one more time, just one more swing, one more swing, then that's it. We could potentially end the 2009, the 11-year bull run. Now again, if this took 9 years, and now some people might say, couldn't it be your wave 4 here? All right, Henry, that this 2018, sell-off here, couldn't that be my wave 4 in the grand super cycle, and therefore we top out like a major top out? Then we're gonna be crashing, like correcting again the entire rally. Seems similar to this kind of correction like this. So we can, I mean, if we correct the entire rally, we can crash 50-60% from where we are. So from 3,200 we can go back to like 1,800 or more if it is a major top, right? But here's why it is not likely to be happening, because if this, from the distribution point of view, you need to be sort of symmetrical. If this took 9 years, we cannot just get a wave 4 in just a couple of months, right? It's not consistent with this. The cycle is not consistent with this. So in other words, later on, if we do finally get that big grand super cycle wave 4, after this is finished, what we're gonna be having is gonna be a multi-year correction. It's going to be multi-year correction. It's not going to be over in just 1 month, 2 months, 3 months. It's not going to be over in 6 months, right? So it's going to be a lot of choppiness, ups and downs in between, right? And it's not going to be forever up. It's going to be not going to be forever down. It could be a triangle. It can be a multi-year triangle like this. So it's going to be a range, kind of possibly a range kind of situation for many years to come, before we finally we got a chance to do one more push higher after that to complete a real 5 waves up from the all-time low. That's the general idea. Now we are more or less very close at a very interesting inflection point right now, and we still do believe, still cannot rule out one more push higher before we finally end. And there is a reason for that. I can go on and on. I can show you many different instruments, but we talk about that, the reasoning and the logic and why and so on, to our members using because we observe many different instruments and so on. So for now, I'm just going to be stick with the ES, but suffice to say, all I can say right now is that we still cannot rule out a possibility that we still see one more push higher before we finally end this cycle as a 5 waves, and therefore also this cycle as well, and we then get that wave 4 in the grand super cycle, right? So like we mentioned, we believe this completion is going to be sometimes this year, right? So sometimes this year we're going to be ending the cycle from 2009. However, for now we still calling for possibility that we could see one more push higher before we finish. All right, so now back to the 1 hour chart. Okay, what can we do? Like I said, this sell-off now approximately can reach around 3,000. Okay, so that will be possibly in the area where we can expect a bounce from there, right? So either we go higher from there, from 3,000, go to new high, or we can bounce and then fail, right? We can bounce and fail and then turn lower again. Now if it doesn't make that last push higher, then we could be completed earlier, things like that. Then yeah, I mean, we could be, it's not going to be, most likely it's going to have a bounce, right? It's not going to go down straight non-stop without any bounce. So we're gonna have bounces along the way, and we're gonna have a bounce. But if if we are going to correct larger degree, that bounce can fail and then starts to turn lower again. All right, so that's the update from the ES. Um, Shorter cycle as well as a little bit of the larger degree. Hope you enjoyed. Please do like and subscribe, and see you all again tomorrow. Have a nice day, everyone.